we've been 7 consecutive years of deficits where demand has really been greater than supply. And therefore, we think that silver is likely to be supported well going forward, especially because, there's this talk about above ground silver, a lot of silver that can, reintroduce itself into the market, but that has reduced significantly over the past 5 years because we've had 7 consecutive years of deficits.
Hey, welcome back inside our proactive newsroom. And joining me now is Jacob White. He is the ETF Product Management Director at Sprott Asset Management. And Jacob, it's good to see you. How are you?
I'm well. How are you? Thank you for having me.
Yeah, good to have you along. Excited to learn a bit more about what's going on in the silver market, and that's what you deal with pretty well on a daily basis. So, just an overall comment on what you're seeing in the silver market so far.
Yeah, absolutely. I mean, the silver market has really been very volatile recently, and it's been a great experience for investors longer term. I think, if we're talking about in 2024, the silver price was kind of an average of $24 per ounce, and it really ran up all the way to $117, $118 per ounce in January of 2026. Since then, it's come down quite substantially. We're sitting at closer to that $60 per ounce level, but when you compare that to the silver price over the past decade, you're still seeing very elevated prices that we think that are likely to be sustained and help move forward going forward.
Yeah. Are you talk to me a bit about silver and the uses for it these days? Because it's everything's changing, obviously, with where the world is going. So silver becomes a commodity in a lot of different ways.
Yeah, absolutely. So silver has this dual role, one from a monetary application, and it's kind of been pulled ahead, in that explosive price rise from its role related to gold and precious metals, its monetary role. And that's being pulled along from deglobalization and debasement, as a lot of these central banks have really increase the purchase of gold, and that's kind of increased the relative value of silver and jewelry and all of these sorts of things. And then on the second hand, there's the industrial uses. And really, silver is kind of the second most used commodity in the world in terms of use cases. It's used in medicine, nuclear, all of these sorts of things. But predominantly, it's got the highest electrical conductivity in the world. And so this electrical use case has really kind of taken over. And now is the electrical is about 40% of demand. Industrial total use is 58% of demand. And that's really been a driving force, recently, especially as we've seen solar panels kind of really gain momentum. And as this energy kind of security initiative has taken place. I think, China, for example, is leading the world's lead out in solar panels. So a lot of this, has started from an energy transition kind of perspective, but has really shifted, as we've seen the war in Iran and the Strait of Hormuz disrupted, as we saw the Russia war in Ukraine disrupt energy flows. A lot of this has shifted, the story behind solar from this kind of energy transition narrative to this energy security narrative. And so we think that despite, policies, actions in the US, for example, the Inflation Reduction Act subsidies being repealed, a lot of this momentum and deployments is going to continue in solar. Like, for example, China's not leading the world in renewables for energy transition reasons or climate reasons. It's because they're energy dependent. And we think that this trend is likely to kind of continue to push solar and then ultimately silver demand higher.
Yeah. Do we have enough silver in the world right now? Or I know there's a lot of mines that are looking at potentially opening up with silver included, gold obviously as well. But do we have enough silver in the world, or is there a shortage coming? How are we looking?
Yeah, great question. So I think there's this dichotomy in silver type of mines where basically over the past 10 years, there's been no growth in silver. You've had 1 billion ounces in supply, 10 years ago. Now you're maybe 1 billion and 1, so 10% growth over 10 years, less than 1% annualized. A lot of that is because 75% of silver is really made as a byproduct. So that means that we might have a giant lead and zinc mine or a giant copper mine or a giant gold mine that has silver as a tiny byproduct, and that's how the majority of silver is made. And so that means when the silver price rises substantially, like we've seen, you don't increase your silver production. And so even if there's enough silver in the world, the production isn't incentivized to increase for the majority of silver mines, except for the 25%, mines that we call pure play, or ones that target predominantly silver, have over 50% of silver. And so you're at this case where, we need more silver. There is, enough silver, but it's really getting it out of the ground and finding those deposits that are, mostly silver, where we're going to see that growth going forward. And as a result, we've been 7 consecutive years of deficits where demand has really been greater than supply. And therefore, we think that silver is likely to be supported well going forward, especially because, there's this talk about above ground silver, a lot of silver that can, reintroduce itself into the market, but that has reduced significantly over the past 5 years, because we've had 7 consecutive years of deficits, and so a lot of that is no longer available.
Well, it's fascinating stuff. I know the demand is there, and we'll see how the pricing continues to fluctuate in the months to come. So, Jacob, thank you so much. Really good update from you, and appreciate your time.
Yeah, thank you for having me.
All right, there's Jacob White. He is the Director of ETF Product Management at Sprott Asset Management.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.